Next presenter is actually me. So I'm going to go ahead and jump in and share screen, and then we'll wrap up with my friend Catherine. So let me see if I can get this happening here. Share screen. Here we go. Share from beginning. Can everyone see that okay? Is it working all right? Fantastic, thank you. So yeah, in addition to working with the Guidance Symposium, I run Valark Financial Services in downtown Hartford, and for nearly 30 years, we have built a financial planning practice that specializes in helping families fund and pay for college. You might also know us as the guys that provide the how to pay for college presentations at many, many high schools around Connecticut each year. And you might also know us under a different spelling, which is Valark without the Y in Valark. And I see that, or say that, because you might see two iterations of the spelling of our name when you look us up. And this stems from a recent trademark dispute that we'll gladly explain to you with the help of Elmo, if you look for our silly and a little humorous video that we've posted on Vimeo.com. But we're here today not to talk about Elmo, but instead the FAFSA Simplification Act. And most would agree that FAFSA does need to be simplified. In fact, the cost of attendance formula that's used in the FAFSA was defined over 4 decades ago in 1972, and yes, it's time for an update. Last year, only 61% of seniors applied for aid, and there's one thought that in some part of that is due to the complexity of the form, and many families approach completing the FAFSA with the same level of trepidation that they have when completing their taxes, and probably that's not good and needs to be addressed. So, in the COVID relief bill of 2020, there was a 167-page insert that makes some important changes to the form and the process. First, the number of questions was reduced from 108 to 36. And while that does count as simplification, there is some thought this may be an oversimplification that just generates brand new problems. But at least we have until school year 23-24 to figure this all out. One important change is the term expected family contribution will be replaced with a term of the Student Aid Index, or SAI. This is, well, assumed to be a positive change, since many families are misled into thinking their EFC is the amount they will actually pay. In my opinion, the Student Aid Index is even less clear because it gives no indication of the ability to pay or the aid that will be received. It's only an index. And how does that relate to reality? Well, I don't really quite know just yet. We'll find out soon. However, one new change is the Student Aid Index does allow for negative numbers. For example, negative 1,500, whatever that may mean, is the lowest possible reading. And that would allow students with the most need to receive aid in excess of the cost of their attendance. Some other minor updates eliminate the question regarding drug convictions, and the question regarding selective service will remain, but it will not affect the outcome. It's also now required for colleges to fully disclose the total cost of their schooling, since some of their colleges continue to bury their total costs. Also, the asset protection allowance, which is the amount that families can hold it without being counted against them, has steadily decreased over the years, and we believe it's likely to disappear completely within just a few years. In other words, any savings a family has is likely to be expected to be used fully or in part to pay for college. The student's income protection allowance is raised to just over $9,400, but it frankly has little to do with earned income because most students don't earn that much in any one given year. Well, we want folks and parents and so forth to understand that it has a lot more to do with capital gains that are generated when an investment is sold to raise cash to pay for college, and that gain counts as income and shows up against the income protection allowance. We think it's important for parents to understand that part of that in part is something we cover in the presentations at schools. The capital gains is considered part of that income. Also, income information will continue to be pulled down from the data retrieval tool from their most recently filed tax return. The simplified needs test and automatic zero still apply for families with income of less than $60,000 a year, but previously a family that met the automatic zero test would still be required to disclose their assets. But with the new form, once the qualification for automatic zero is met, there will be no further questioning on that item. In other words, a family that has income that allows them to meet the automatic zero or simplified needs test could literally have just won the Powerball yesterday, and none of those Powerball assets would be required to be disclosed. Divorce or separation is a major change. We think it is dramatically to the worse. Previously, a family could reasonably choose which parent would be completing the FAFSA, and that would be assumed to be the parent with the lesser assets and income. But with the new form, that's no longer an option. Even in the event of divorce, the parent with the greater assets and income, which is defined as whichever parent provides the most support, must complete the form. The person with the higher assets and income must be the one to do that form. And this closes an enormous loophole that divorced or separated parents were able to exploit. And I can hear the groans and moans already from the audiences that we present to at the high schools as we have to discuss this new development. Clearly, the feds are further strengthening the basic philosophy of the financial aid system that parents are expected to contribute to their kids' education to the extent that they truly can. And that truly can part is what is being tightened down in this scenario. Another brutal change is the FAFSA will no longer divide the ability to pay for school amongst the number of students in school. For example, previously, let's say that a family had a high ability to pay, I'll make up a number, maybe $40,000 a year. Well, that's a lot. But when the next child comes along under the previous system, there would now be 2 kids in school, and that $40,000 ability to pay would be divided between the 2, so $20,000 each. And that would raise the likelihood of either of them to be able to receive assistance. But in this new scenario, this change where it's not divided will significantly reduce the amount of financial aid that is available when we have multiple family members enrolled at the same time. This is a harsh and regressive change from the current formula. We're not even sure it may have actually been an oversight that is yet to be corrected. It's so harsh. We're not sure yet. But it is clear, we're not clear, I should say, how the ability to pay actually will be handled going forward in the event that we have multiple students from one family in school at once. We will just have to wait and see if this new rule sticks. So, how do we interpret all these changes? Well, first, the new divorce rules are going to be a mess. And now it's unclear whether the new student aid index applies equally to each student, or how the ability to pay factor will be divided when there is more than one student in school. We're hoping for some clarification soon, and we'll certainly roll that information out as soon as we get it. We'll also all just have to adjust our presentations and strategies to manage this new brutal change. One other interesting item is that distributions from a 529 owned by a grandparent or a cash gift from a relative will no longer be reportable as untaxed student income. This is a massive change that now unquestionably makes a grandparent-owned 529 plan to be one of the most sheltered saving plans in terms of financial aid. But will it create a net improvement in families' financial aid picture? Probably not. Because again and again, the system and even with these new changes continue to reinforce the thought that a family's income is far more and above the single most important factor in determining whether a family receives support or not. But it does still reinforce the importance of getting families to save as much as possible into a 529 plan. We've also learned that it is now prohibited for schools to universally deny all appeals. So that brings us back to what we think is one of our strongest weapons in the arsenal, which is negotiating and appealing financial aid awards. And we continue to reinforce using the 4 appealable points in our presentations, and we are continuing to fine-tune our strategies under those points relative to how COVID might have affected a family's ability to afford and pay for college. There's a new amendment to the definition of an independent student that is actually a nice improvement that allows us to include situations where the student is unable to locate or contact a parent, or where such contact would pose a risk to the student. We actually see that scenario quite a lot when we talk with folks. And it's good to see that this is now formally addressed and defined in the new set of rules. But bottom line, we are still the second most expensive country in the world in terms of overall cost of college education. And we think the single most important factor that makes college possible is for parents to set doable, affordable, and realistic goals in terms of college cost, and to communicate those goals clearly and early on to their kids. We believe one of the best tools to help families is some sort of cash flow model. And in our office, this is a tool that we make available at no charge to families that helps them create a 30,000-foot view for college for all of their kids over time. We find that when we deploy a tool like this, all of a sudden, families start to make much more realistic and informed choices in terms of college cost and financial aid, and we're happy to make this tool available to anyone at any time. So what do we do now? Well, we think it's the best practice to provide responsible and ethical education to parents early on. Unfortunately, that education tends to happen late, since most parents rarely seek out information early enough where it would help them the most. They're caught in their own personal whitewater of raising kids, paying for daycare, buying a house, furthering their career, saving for retirement, but still, eventually, the truth will set us free, even if we deliver it to them late in the game. And yes, it might make them mad as hell at first, but eventually most families reach some sort of an acceptance of their college funding scenario. And as always, our team is happy to help at any time. Feel free to contact us at any time if you need support for your school or with an individual family, or to clear questions you may have for yourself as the new FAFSA rolls out. And thank you for listening. I hope this is useful. And are there any questions that I can take while we're here, please?
This is Jason from Waterford. Do you have any suggestions for advocacy on the negative changes to the FAFSA? Advocacy to change them again.
Questions? To change them again. Well, goodness gracious, I haven't heard of many changes to the FAFSA rules in quite a long time. This is, as we said, this was defined originally back in 1972, and all they do is change the measurements for different formulas and things. I'm afraid I don't have a lot of thought there on advocacy. That might be up in Deborah's bailiwick up in Washington, D.C. But I'll tell you, I'm a big fan of saying the FAFSA is the starting point. That's our baseline reference. But the negotiations and the appeals go beyond the baseline to address each family's individual circumstances. And I think that's where we can probably get our most traction in each individual case.
And then I would recommend that you reach out to your members of Congress and let them know how this is impacting people. We also think this particular issue around a family that has more than one child, and now that you're not counting others, we think that, like Charles said, we also think that maybe that was a technical goof. And we're trying to see if we're trying to understand whether or not it was a mistake and they didn't intend that, and if we can get that corrected. So you've got some other folks out there that are working to address it, but the number one thing you can do is reach out to your congressional office and let them know the impact this is going to have, and see if it can't be corrected, maybe in a technical correction bill. There's one at the end of every year, and you may want to try and see if that can. I would give specific examples of how this is going to impact families when you do so.
Good, thank you.
Yep.
One more question if there's a moment, and then if not, we'll transition to our next speaker.
I have a question.
Yes, sir, please.
Just wondering what, so that sheet that breaks down sort of, more than one student, I imagine, you covered it. It probably looks terrifying at first. So What's that conversation kind of look like when you see that parent that's like, this is impossible for me?
Well, there's two levels to the conversation in my mind. The first is, what's the technical read? The read is, we used to say whatever your expected family contribution is, divide that by the number of students in school. And theoretically, that creates a gap between cost of attendance and ability to pay for each student that is magnified the more students we have in school. But the reality of that is, and I think that applies to this scenario also, is who cares? What difference will it actually make in terms of increased ability to receive financial aid? Because income drives this more than anything else. And after we get above a certain income level, doesn't matter. All we're going to qualify for is the additional capacity to borrow, whether it's 1 student or 10 students. And that leads to, Kathy's story here as well about loan forgiveness and excessive debt. There's the technical answer, and then there's the reality-based answer. And the reality is, above a certain income level, there's not much more for us to do except to receive additional lending. Thank you. With that in mind, I'm going to transition to our last and final speaker.